Welcome to the KP Podcast, where we talk about the business of real estate. A podcast about leveraging opportunities, growing your business, and experiencing financial freedom. Here are your hosts, Keith Anderson and Peter Cambukos.
Hey guys, welcome to the KP Podcast. Super excited to have you guys with us. I am here with a special guest today, Bill Sandvig. Super excited to have him here with us. Typically, you would see my lesser looking better half, Pete Cambukos, next to me, and he is no longer here today. He is actually enjoying a vacation over in California, enjoying his life while we're over here in hell, just literally melting physically in every possible way. It's 116 today, I think it is.
116, yeah.
I think so. How are you
cooled
feeling?
Down since yesterday.
You're from South Carolina, correct?
Correct.
And that temperature there, vastly different right now, right?
Yeah, so I checked the weather this morning, and it was actually, real feel here was 104 with a temperature 104. It was 90 in Charleston, South Carolina with a real feel of 120.
So you're just condensating.
So yeah, you step out of the car, and then you know, it's wet. So
just nonstop.
Instantly wet, yeah.
So it's funny because we had this conversation the other day off air, and it was, we are in the car and we're sweating because we're like, our back's against something, like things are happening. And then as soon as we step out of our car, we're instantly dry. We're like, nice. You guys go to your car for shelter? Like,
yeah, opposite.
You
right.
go to the car to dry out because it's so wet outside?
Yeah, the steam room outside.
Yeah. So for those of you guys out here in Arizona that are just, man, it's horrible, it's miserable. It could be worse. You know, there's worse things out there.
AC lowers the temperature, lowers the humidity from 100% to like 60%, and so it feels very refreshing. So it's like dry. It's a dry heat in your car.
But like when you're in your house, it's still kind of like it's somewhat moist. Like it's unfortunate.
Yeah, we actually have dehumidifiers all through the house.
Dehumidifiers.
Yeah, dehumidifiers.
Like we do the opposite here. Like we have to put water in the air because it's so bad.
Yeah.
And we're just, oh man. So those of you guys out there that are struggling with the temp, don't sweat it. No pun intended. So we got some cool stuff to talk about today. Bill is one of the co-founders of Clear Mortgage, a big partner for us on the real estate side, and an up-and-comer and a big growing partner in the mortgage space with massive aspirations to change the mortgage industry as a whole. And so, honestly, I want to just dive into your past, like tell me a little bit more about Clear and that thought process and why do something that, like, there's so many mortgage companies out there right now, right? Why do something to, mess with that whole giant, mosh pit of mortgage companies and really just adjust what's already there, right? Like, it's working. Like, everybody's doing it. They're making money. So why would you come and bring something new and innovative to the industry?
Well, you said it. I mean, everyone else is the same. You have mortgage company after mortgage company that are selling vanilla. They're all vanilla. It's the exact same flavor. They're wrapped in a different brand. But it's the same product and it's the same environment, and salespeople have been kind of lulled to sleep into the way that they think things have to be. And Clear Mortgage came in to disrupt really with one word, and it's truth. We decided that the loan officer, the team members that we build a company with deserved more. And we had, I've had past experiences in my career where the truth wasn't accessible. The lending industry historically has a shroud of darkness around it, and the entire collapse and the Great Recession was heavily on the back of mortgage companies, lending practices, the darkness that was in the money grab of the lending industry, and so the Great Recession happens. A lot of changes took place, a lot of regulatory changes took place, but in a lot of ways, the darkness just shifted to take different forms. And when I talk about darkness, I'm talking about really a small group of people that are controlling money and controlling revenue inside of a company. What Clear has set out to do, when I talk about truth, we live inside of a certain set of principles, and it starts with truth. And the core of our company, we call them our 3 pillars, are transparency, empowerment, and ownership. And the transparency is where it all starts, right? Transparency equals truth. And so we said, you know what? what would happen to a mortgage company if we just open sourced it? What if there was no secrets? There was no room for darkness. Everything that takes place is just on the table in truth. And what kind of freedom can we create? What kind of creativity can we create?
Yeah. So like, and that's interesting that you use the word truth. And I guess your common viewer or people out there, like, I'm kind of confused in the sense that, like, is it not true before? What wasn't truth in the mortgage space? Like, I guess that would be my biggest probably question, and probably consumers' question, like for LOs listening and real estate agents listening. It's like, what wasn't true? Like, what were they missing out on?
Dodd-Frank, when they came out with all the new regulatory rules post the recession, was really centered towards consumers. It was centered towards the way that the lending industry handled consumers, protecting consumers, creating a very strict set of rules about how revenue and rates could be managed.
Commissions
and things of that nature. Yeah. Well, and that was a necessary step.
Yeah.
Absolutely. You had the ability for lenders to earn exorbitant commissions, exorbitant fees just by selling higher interest rates. That had to go away.
Yeah.
I actually wasn't even in the industry at the time when that was the case, and I hear about it, and a logical step, a logical progression took place. Yeah.
Don't take advantage of people. That seems great.
But what's happened, right? But what's happened is that darkness really shifted to the loan officer, and because the mortgage companies themselves still needed to maintain. They had
to make the money.
They needed to. They want to maintain control, right? Okay. And so they hid behind regulatory compliance, saying, loan officers, this is how it is now.
You're the bad guy type mentality.
You earn what we tell you to earn, and this is how it's going to be, and you don't have to worry about anything else. And so mortgage companies just shifted that darkness to the sales field. And I've experienced as a leader, as a builder, I've experienced as a loan officer. It's an interesting thing. A great way to summarize what a loan officer's experience looks like is in just draw the analogy to any other sales industry. When you're selling something, you know a couple of key pieces of information.
Have to.
Right? You know what the value of that product is.
Yep.
You know what the revenue that it's generating. You know what the profit in that company is, and you know what you're earning.
Yeah.
In the mortgage industry, that's not the case. Loan officers are told, this is what you're going to earn. Keep your head down and don't worry about the rest. And so you're out there. Not only do you not know what the revenue and the profit is of the product you're selling, but you are working for a company that has the ability to change that number at their whim inside of the regulatory rules. And so we said, I know that's how it is, but is that how it has to be? And so our founding question was, can we just show everything to a loan officer? Can they know everything? Can they know?
Are they allowed to?
Right. Are they allowed to? I mean, that's really where it started.
That's how bad it was? It was like we didn't even know?
Didn't even know, right? Didn't know, is this possible? Is it allowed? And it's kind of funny, regulators, mortgage companies, they don't want loan officers to know the truth.
So let me wrap my mind around it, because I've obviously been a part of what we're doing and continue to grow and scale with you guys and build something really cool. But what you're telling me is that a loan officer selling a rate to a client has no idea. They only see what their comp is?
They only, excuse me.
Like they only know what they're going to make, like their own commission?
They know their commission.
Okay.
And they know the rate that they've been given that day. And they have no understanding of what the value of that rate is.
Well, how does the bank make money?
The bank makes money by selling that product, that financial vehicle they bundle it, create a mortgage-backed security, and they sell it to investors that are looking to get a very conservative return with hedge funds and things of that nature. So there's a very specific value that every single mortgage has in the secondary market. It's a known entity. Okay. Every single mortgage company is built on that number. Okay. And the mortgage company, behind the scenes with a very small group of people, is changing that picture at their desire. They can decide that a loan is worth 3% today and 4% tomorrow, and they need to ask permission from no one. And so all the requirements is that they move that wicket together. So if the company's going to decide we're going to make 5% on a loan for the next month, that's what they make. And so they move it together. I like to draw an analogy to the real estate side. If you're a loan officer getting recruited by a mortgage company, let's put what happens in the lending side in the real estate side.
Yeah, I'm kind of think of an example right now.
Right. So imagine if you are recruiting a realtor.
Okay.
And they wanted to know, hey, what's my breakdown? What do I earn in my commission? A normal question,
Yeah.
right? And you're going to say, you make 1%. And they go, okay, well, that's not as much as I'm used to, but what are you going to make? Well, I'm not going to tell you that. Okay, well, what support are you going to provide? Well, I'll provide you this here. And like, okay, well, how do I hold you accountable to that? Really, there's no way to hold me accountable to that.
You're just going to have to trust me.
Yeah, just trust me. And by the way, right now, when you go on to a listing presentation, we're going to ask you to sell a 3% listing rate. Tomorrow, I might change that to 3.5 and not tell you. And then the day after that, I might change that to 4 and not tell you again. Oh, well, will I make more? No. Just keep your head down.
Yeah.
Right? So it's a funny illustration, but that's basically what happens in the mortgage business is we're going to tell you what you make, and we can move the target to what you have to sell whenever we want to without asking you your opinion, but impacting your ability to sell and make an income for your family.
Yeah, and that's why you see so many consumers, they go through the process of, I need to shop rates. Like I have to make sure that I'm getting the best deal. In all reality, why is shopping rates even a thing?
Because mortgage companies are operating at different budgets.
That's what I'm saying. So it's like if there was a little bit more truth and regulation in the marketplace and everybody kind of had the same box to play in for the most part, consumers would start shopping for service and ability and, the experience more so than a swing rate that could be up to 0.5% at a given time, right? Like there's some companies that charge more, but the consumer doesn't necessarily know that they're charging more, and then they just look at their pricing and that interest rate's just way higher, and then other companies just shop it out and they're way less just based on what the situation is, and the actual LO has no control of what that looks like in any given time.
LO never has control of that at all. Wow. And when a consumer is shopping rates, there's really no understanding. They're not going to have any understanding or awareness on why one rate might be different. And it really just boils down to the way that company is structured. A 4% interest rate is worth a certain amount, and a 4.5% interest rate is worth a certain amount. It doesn't matter what mortgage company you go to. It's just how is that money being allocated. And in the traditional mortgage company, the only person who's in control of that number is a very small group of people at the very top of the company, and they're not letting anyone else know what that is.
So they're the only ones that truly see the amount of revenue that comes in from the loan.
Yeah.
So bringing it back full circle then to what you're doing to innovate, like you talked about truth and letting every LO know, like pulling back the curtain or removing the keyhole of their vision sight, right? Like I've heard you use that a lot of like, right now, LOs are looking through a keyhole and trying to sell or paint a picture of what's on the other side, literally looking through this tiny little hole, and how it's extremely difficult to do so, but they're pointed in one direction, hoping for the best. So how does Clear, granted, it's a fantastic name, by the way, like it's literally like, could I ask for a better like name of clarity when it comes to what you're trying to do with truth, but
definitely a great buzzword, right? Clear mortgage, clear transparency, clear to close.
There's a lot.
It's a very endorphin, creating word in our industry.
We were just talking about it the other day that I think the only one that doesn't work is like a clear T-shirt. That's basically not wearing one. And
we give out lots of free clear T-shirts. Yeah.
I saw in the trunk of your car that you had that fishnet T-shirt that was completely see-through with the clear mortgage on it. Yeah. Like if I don't get a large of those, honestly, it's super.
I brought them for you.
I might go medium with those because it's tight. It'll feel better. But it's fantastic to see that. And so, what are you doing to change the game for the LOs? Like, if you're an LO listening on here, like your question needs to be, okay, well, what makes your bank any different than anyone else? How are you going to give us more transparency than the industry? So, what do the LOs get at Clear to help them, I guess, be the difference?
So, we're the first company to ever scale truth in the lending industry. What that means is, just like every other sales industry in the world, when you sell a product, when you price a loan, when you lock a loan, and when the loan is sold, you're going to know exactly what the revenue of that loan was to the company. You're going to know exactly what the company is making on that loan, what the company is profiting on that loan. You're going to know what your entire leadership team is making on that loan. You're going to know what your support team costs, which you control because you establish your support team. And then at the end of the day, you're going to know what your commission is. And you'll know if that loan was profitable as an individual loan or if it lost money as an individual loan. So for the first time in your career, you actually know what's taking place and you know where the money is being allocated in the loans that you're selling. And we do it at scale. We report it to you in real time. You have access to it in real time. You can see how your performance is going in real time. And it's a complete shift. Now, it's still a mortgage company. You build a business plan. You build your margins. You build where you're going to have your par. You still operate at par, price a loan, lock a loan, close a loan, but it's your par. You're the one that's established it.
So no more little group at the top. It's the whole company throughout, right? So they get to see. So are they the ones basically selling it to the secondary market? Like, are they pricing it accordingly to that investor?
We still have a secondary department that is handling and making sure we're maximizing the return on the loans we sell, and we have the best investor products, and we're always adding new investors to make sure that we stay sharp, just like any mortgage company would. The nuance here is simply knowledge, right? You have an awareness that you've never had before, and you have the access to make decisions like you never had before, right? One of the fundamental threads of who we are is we're a very entrepreneurial company, right?
Yeah.
We want people that are thinkers and creators, and to create, to exercise free will, to make choices, to build a business. You need information. Loan officers have never been empowered with the information that they need to truly manage their business.
So they're going to have basically what I'm just trying to grasp right now is before they wouldn't see how much room they had to make a decision financially for competitive pressure. There was no, what was the process? Are they just reaching up to upper management and asking them?
It's like playing poker and the person you're talking to is looking at both hands, right? So you're a great upcoming loan officer and you're now steadily closing 4 or 5 units a month, right? You've been doing it on your own.
Yeah.
You're doing all your own stuff. You're ready for an assistant, right? So you go to that leadership and you say, I'd like to take the next step in my career. I'd like an assistant.
Yeah.
And they go, well, you're not quite at the level that you need an assistant yet, but once you're at 7, we can probably start talking about it. Or if you're willing to take a pay cut and you can contribute toward the assistant, we can help you get there, right? All the while, you have no idea that your company is making hundreds of thousands of dollars a year profit on the business that you're doing in hand. With our company, you would know that was happening. There's a fair agreement between what Clear Mortgage is going to make and what we're going to profit. And when there's additional revenue coming in, you're making us more profit. It's not their money. That's important. That's an important compliance thing. The additional profit that they generate the company above and beyond what we've agreed to, it's not theirs. They've made the company extra profit. They get paid a fair wage and a fair commission according to standard comp, right? But they're aware of what it is. They're aware of the fact that they made Clear Mortgage $100,000 more than we bargained for.
So basically, you're saying is now as an entrepreneur, I can go back to you and say, hey, I know that you have $100,000 that I helped you profit even further. I need your help to help grow my business.
Invest in me. Invest in me.
Yeah, and so there's no, you guys are cool.
Absolutely.
You're gonna invest in us?
Absolutely. You made us $100,000 more than we were expecting, than our entire business needs to run. And we're going to invest in your success, right? It's like the way we like to say it is, it's our money, but whose opinion do we care about how to spend it? It's your opinion. It's the loan officer's opinion. It's the profitable originator that's going to come alongside us and say, here is where I want to take my business next.
Yeah, that's so cool because a lot of the LOs that I've partnered with and talked to over the years, it's it feels very corporate, very regulated, very structured. There's no real decision making in it. And you said a couple times the word entrepreneur. And I know from the real estate side of things, and those of you guys listening from the real estate sector, it's I started a real estate team and I see all the numbers. I know exactly the GCI coming into the company. I know exactly what my brokerage is taking. And then I have full capacity to leverage those funds to then invest in my own company to continue to scale. It's what made our team one of the best teams in the state and the country, was because I had line of sight. If I didn't have the data, if I didn't know how much was there, there's no way I could ever get the staff that we have now and the leads that we have now and the structure and recruit the way we have, because we'd have no, how could you run a business with not knowing your revenue? It doesn't even make sense. It's well, I'm spending this much, but I really don't know how much I'm making.
When I try to break it down for realtor partners, it's so fundamentally obvious in business the way that it should be done. And it's in such contradiction to the way it's done in the lending industry. My partners, the founding partners and I kind of pinch ourselves. We're like, why has our industry taken so long to have someone come in and disrupt in this way?
Yeah.
And it's like, why did it wait for us? And because we feel grateful that just to make a choice to live in a principle of truth, and all the incredible ripples. Entrepreneurial is a word that's put on a pedestal on the real estate side.
Oh yeah,
your business, run your business.
entrepreneur.
You're a business owner, right?
CEO,
It's your business. We're talking about the choices you've made and the things you've created and the way that you build your business. The lending side is not like that.
Wow.
Entrepreneurship is very underappreciated, and it stems from the fact that you can't truly create if you don't have the information to create. I'll ask you a question.
Yeah.
I don't know if you've heard me ever ask this question before. Why do you think the United States of America has been a global elite and a global force and for so long?
Just in general?
Just in general.
Okay.
Yeah. For centuries.
Spending, consumers just taking, eating nonstop, and it just kind of creates.
I've heard a lot of good answers, right? It's consumerism, military, political climate, founding fathers. I think fundamentally beneath all of that, there's really one reason, and it's freedom of thought. It's freedom of thought. We simply have the most hearts, minds, and souls inside of our borders operating in an environment of freedom of thought. There's other countries that have freedom of thought, right? But they don't have as many people. The people that have a higher population than us, China, India, they don't operate in an environment of true freedom of thought. When you have these creators, we're not smarter than everyone else in the United States. We're not better than everyone else. We just have more hearts, minds, and souls creating.
Dreaming.
So if you look on a list of the top 10 artists, musicians, right, entrepreneurs, innovators, tech, medicine, there's always Americans on the list. Again, not because we're smarter.
And we're not the only ones on the list.
Just have more people creating. That fundamentally is what Clear Mortgage is. It's let us step out of the way. Let us empower you with knowledge to be the creator that you are, the entrepreneur that you desire to be, and then create for the first time in your career. We don't want to create for you. I want to step out of the way and watch you create, because 1,000 minds creating is going to be infinitely better than I can ever be, than any of my partners can ever be. And so that's what the beauty of Clear Mortgage is going to be. It's going to be unveiling the truth and then empowering creativity through free will.
So the thought that comes to mind, it's like, okay, well, if you're in this type of a box, right, like you're still regulating what their commission can be, right? So there's no way that they could afford to pay themselves comps that are like upper ends of the all these companies that are out here, right? Like if you're got all this stuff and you're having all this movement of profitability and pricing stuff, like is there that much behind the rate sheet of these other companies to pay themselves a comp that's profitable?
There is a lot more than you realize, and there's actually a lot more than I even realized when we set out.
Really? I mean, you uncovered your own.
Yeah, we didn't know.
Research
We didn't know. We didn't know. We didn't know. I had built a $500 million team for a large top 10 company, and my job as a leader of these branches was to toe the line. They would ask me, why are rates high? I didn't know. I had a line that I spilled. Well, we have compliance and regulation, and we have all this amazing underwriting, and we have this and this and this, and you toe the line.
Yeah.
And I sold it, right? And I believed in the company, and I believed in what we were doing, and it was a great company. But there's no awareness, even at a national sales leader level at most companies, about what the value of what they're really selling is. We like to joke that at our company, a junior loan officer knows more about the mortgage widget than a national sales leader at most companies.
Wow.
Because we're unveiling the truth.
Yeah, that's cool. So you're literally referencing the fact that an LO could work for Clear and theoretically make a higher comp and sell a lower price across retail lines?
Oh yeah, that happens all the time. Part of our discovery process is identifying where the fat is, right?
Wow.
And you heard me say it earlier. In our company, our loan officers know exactly what their leadership team is making. They know what their leaders are earning.
Shoot, I didn't even think about that, but like how many LOs have a branch manager, a regional manager, a national manager, a general manager, an area I've seen it. Like I've seen it on these payrolls and this cycle. It's like they might have 5 or 6 people with their hand in the cookie jar, if you will, and that extends that purposely affects their rate sheet.
Absolutely. Yeah.
And they won't have any idea. You're saying they would have no clue what they're making on the...
No clue.
Maybe just their direct might be the only one they might have an idea, but
usually
not with confidence?
Yeah, usually not. I mean,
really?
You talk to enough loan officers and you'll hear stories of, I left the company because I found out what my leadership was making.
Oh.
Right?
I
found out.
The same situation.
And then they just walk into the next situation that's the same. Our industry has got so many challenges, and the truth is going to set it all free. Because, and I know that's kind of a catchphrase, but it's powerful, and it wipes away so much darkness. Just the truth, right? They like to say the most infinite darkness can never put out the smallest light, and the smallest light will break the most infinite darkness. And that's what Clear Mortgage is. Every time we have a new team member join, see that light, the light grows, the vision grows,
wow.
and the disruption radiates. And it's exciting to see the ripples. There's so many people. Let me back up a little bit. After Dodd-Frank, there's a very specific way that the mortgage industry and mortgage companies started to grow.
Okay.
And you used that keyhole reference earlier.
Yeah.
What they did is they went to identify upcoming loan officers that were looking through keyholes, right, and said, "Hey, you're good at what you do. Wouldn't you love to stop looking through a keyhole and look through the knot hole of a fence? We're going to invite you to be a branch manager.
Yeah.
And you're going to have a P&L.
Oh, there's that special word that you hear every once in a while.
You're going to have a P&L now, and you're going to keep doing what you do, but instead of just worrying about your comp, we're going to let you set margins on your P&L, and you're going to see more revenue." And so what they've done here is they've taken you from a keyhole view to the knot hole in the fence view. But here's the thing about P&Ls. They are manufactured by the company providing them. You have no awareness of what's happening on top of the P&L. That's actually the exact same problem that you have in the broker space. The wholesaler establishes a price that they're going to pay you. You have no awareness of what the wholesaler is making above the pricing sheet that they give to the broker. And they change it whenever they want. Whenever they want. So let's say you're a branch manager out there and you're like, "Man, this is a great deal. I used to make 150 basis points, but now I make 250. And they just show me that if I can hire a loan officer at 100, I can make 100 basis points on them too."
Yeah.
That was the play for 15 years. That was the play. It was to take them from a knot hole to a keyhole and just
give them a little bit enough.
Just give me a little bit more information and then go to work. See what you can, quote unquote, get away with. Don't pay attention to what's happening on top of your P&L. Just worry about that.
That it also sheds some lights that I hear all the time as well. And like maybe you can shed light on this for me. And then I keep hearing that these mortgage loan officers are going from company to company and they're getting these freaking signing bonuses as if they're like professional athletes and they just graduated to the next level. Listen, I'm in real estate. We run a big real estate team. I've never had anyone reach out to me and say, "Hey, Keith, you know what? You guys are doing a great job over at KP Elite. How about $1 billion signing bonus?" Like I haven't heard that, but I'm legitimately hearing individual real estate or individual LOs get signing bonuses of hundreds of thousands of dollars, up to like even some that I've heard over $1 million signing bonus.
Yeah, that's because
for showing up.
Yeah, that's because mortgage companies don't really care about money and they like giving things away and they have really no plan at all to somehow get that bonus back, right?
But like, how does that that has to affect the company, right? Like, where does that money come
from? This is part of the facade. Okay, the signing bonuses are part of the facade, and it's really this. Our turnover and if you look at the average time that a loan officer spends at a mortgage company in the industry, it's less than 4 years.
Okay.
So
they're jumping.
If you reverse engineer that means that the entire industry turns over on average around 20 to 25%. Okay.
Yeah.
So, and now at past companies, retention was put on the exact same page as recruiting, right? Retention is just as important, if not more important, than recruiting.
You don't have to reteach.
Right. You don't have to reteach,
retrain,
right?
Yeah,
but you know this massive turnover is coming. It's interesting to me that collectively, executives in mortgage companies haven't taken a step back and said, why? Why is there such turnover in our industry? And I believe I know why. And it has to do with signing bonuses.
Okay.
And it has to do with some other practices I'm going to get to in a second. Before I get into this, another fundamental question. Maybe you've heard me ask this one. Loan officers are not executing their free will when they choose to join a mortgage company. There's only one way to truly take away someone's free will. Do you know what that is? Every time. It works every single time. There's one way to take away another person's free will. It only works. There's only one.
One way to take away someone's free will?
And it works every single time.
Give them the choice between two items?
So, well, they can make it. They've limited their free will, but they still have choice.
Okay. All right.
You've limited it, but they still have choice.
Like a fear mentality. Put them up against the wall, like where there's only one direction to go.
I like it. Still, you have options.
All right.
Right? There's only one way. Here it is.
I'd love to hear it.
You lie to them and let them think they use their free will. If you deceive...
Yeah, so House of Cards. You're talking about full manipulation.
Correct. If you lie to someone and they believe they made a choice, you just took their free will. It's why marriages end. It's why parents don't talk to children, right? Because I thought that I chose you, but I didn't. You lied to me.
Yeah, like it's basically... It's like Inception in real life. Like you're literally giving them the choice that you want them to make.
It's why deceit and lies are so disruptive to us as people, right? So let's go back to the topic at hand. This is a recruiting practice that is commonplace in our industry. There is a thing called recruiting pricing logins.
Oh yeah.
Where you literally give someone access, discovering your company, access to your pricing system based on a lie. It is false. It's giving better rates than they intend to give you long term, and it is absolute deceit. And then you price it. Rates are great. Here, you ready to go? Here's that signing bonus we were talking about. Sign on the dotted line for $50,000. All you got to do is be with us for 2 years. Man, this is the place I want to stay for the rest of my career.
Yeah, you just got a big check.
Man, how many times have we heard that? All right. I plan to be the last place I ever moved. This is where I'm going to stay. I finally found it. And then MBS, the mortgage-backed securities, I got an alert that said rates should be getting better, but man, pricing came out and my rates didn't get better.
The 10-year dropped significantly today.
But rates got better, but not as much as I would have expected. Or my rates are just a little bit more worse than I was expecting based on that pricing adjustment. Your company is clawing back that money bit by bit. Your rates are getting worse month by month as they dial behind the scenes the revenue that's being generated on your business. I promise you that the signing bonus was not a gift. I promise you that there was a plan to get that money back. And you hear it. I can't wait to get out of here because my rates are out. My contract expires in 4 months.
I feel like I talked to that, like since being a part of Clear and being around in the recruiting cycle and what we're doing, I hear that nonstop. It's like, I can't make a decision for another 3 months. And I'm like, what do you mean? What are you in a lease? And then they tell me and I'm like, oh, you are in a lease.
It's a deceitful formula that has been working for a decade. And then we wonder why people move. It's because our industry actively took away their free will at the time of decision. We actively took away their free will. I've heard stories where mortgage companies that were about to announce an acquisition will artificially lower their rates the week prior to the acquisition is announced. Just boom, rates better. They announce the acquisition knowing that the loan officer is going to call every loan officer in the company to see what rates look like. The rates look great. The acquisition's complete. 3 months later, things are back to normal.
And they're just, oh, man.
Mm-hmm. So we like to say that Clear Mortgage, because of truth and transparency, might be the first time that a loan officer actually uses their God-given free will to choose where they're going to feed their family and where they're going to build their career.
That is such a vastly different perspective that I didn't even know. I guess my thought was I didn't even know that was happening. And I think the sad part is I'm pretty sure I've talked to LOs that clearly also didn't know what was happening, and they work for the company. Mm-hmm. They work in the industry. They've been in the industry for 15 years, and I've heard you ask somebody, hey, have you ever known a single loan where you knew what the revenue was, that you knew what was going on behind the scenes? and they couldn't even say yes to one loan.
Not one loan. Top
one
producers.
loan.
Top producers funding hundreds of units a year.
Well, and I think that's the other thing, because we've talked to them and we're like, okay, and they're like, oh, I know what they're making. I'm like, okay, how much? What are they making? And they're like, well, it should be around 70, 75, 72% or 72 basis points. And I'm just like, should be around?
Mm-hmm.
Like, so did they send you the receipts and tell you exactly what they made, and like you see the breakdown? Like for real estate, I have a full CDA. Like I get to see the full commission breakdown. I see it from title.
Yeah.
Like, and they're like, no, but I know the guy. He tells me, and I'm like, wait, so you're just fully reliant? Like, would you put your life on it?
No one.
And they were like, absolutely not. And I'm like,
no.
Then you don't know what
They
it
don't
is.
know.
Like it's clear. Like
They don't know.
You don't know. So
They don't know.
You don't like so, and that's like the defense mechanism is you're in that spot of, I want to think that I know that I'm in control, but I know I'm not, but I'm stuck.
Yeah.
And you feel stuck, and I see that. And so what's been cool is since our partnership with Clear, I've seen LOs make decisions for their business they've never been able to make, never been empowered to make before, take losses on purpose to build relationships because they had to in order to grow a business decision, and they sacrificed and they made it work for them. In a compliant way that also benefited the company long term, and the company partnered with them in that decision, and no other company would have been able to do that. And so I think that's so vastly important. As I think about that, is just
I love the stories we get when, transparency and truth is not easy. Like it takes a little bit of a learning curve. We like the analogy of like waking up from the matrix. We say PAR is the blue pill in the matrix, right? It keeps you asleep. You don't
don't worry about it. Just
focus.
sell PAR.
Hey, just focus on PAR. Price at 100. Don't worry about anything else, right? And it's the blue pill that keeps you asleep. And we watch loan officers wake up, and some of them wake up before they join. Some of them wake up after they join. They just kind of felt it and they see what's going on. They don't know that they fully understand it. They get in and they start operating. And I have an entire inbox in my email of just messages. I get it. I was like, I can't believe you guys actually live in this space.
Yeah.
I can't believe the way that you just communicated that corporate decision to everyone, right? I can't believe, I was like, I have these stories of, I feel on fire again for the first time in 10 years. I feel like I got something exciting again. I'm
Purpose.
I'm turned on again, right? I have this fire. It's very humbling, and it's very exciting to see that type of like visceral reaction. And it's the why of our company. The why of our company is to disrupt the industry through truth. That is our mission.
So this brings me kind of like my final point as we get closer to wrapping things up. And this might, in my mind, be one of the biggest points of growth. And coming from EXP and seeing that trajectory of growth, we've had conversations that you wanted to take it one step further. Like it's one thing to have the best value proposition for an LO in the place, right? Where we've talked about in the sense of you're going to do loans anywhere. Why the heck not do it here where you get transparency, truth, P&Ls, and clear entrepreneurship type decision making? But then you blew me away with that last one step further of like, okay, well, this is great and all, but how are you going to grow? Like, how are you going to build? This takes structure. This takes scale. Whenever a company gets really big, they have to hire all this staff and structure and overhead, and that minimizes that gap, that same issue that we've talked about that other companies do to survive. But you guys put your money where your mouth is on a growth strategy abundantly, and enlisted in K1 partnership that you're investing in the LOs for the company, like actual partnership. And then beyond that, sharing up to 50% of the profit of your guys' loans back with the company. Like, am I reading that right? Like, is that like, cause I've never heard of a company that does that. I've heard of bonuses here and there and stuff like that, but never to a point of full profit sharing back. Like what we see in some of these other industries.
Truth and transparency creates freedom, and it creates a lot of opportunities that we probably didn't even really recognize when we set out on the path for truth. And a big part of the why and the foundation of the company was the K1 and the ownership. If this is the first time you're hearing about our company, we're the first company in history that has a scalable opportunity for you, an originator, a sales leader, to become my partner, to soon become Keith's partner, who will be an owner in Clear Mortgage by this time next year. I'm not talking about a stock program. I'm talking about a partnership agreement where I actually transfer ownership out of my name and into your name. And this happens over a period of time. The best way to understand it is you're earning ownership of the volume that you close. We are going to grow, and we're going to be here next year because of the volume that our loan officers close with us. And so we show them gratitude by actually shifting ownership into their name. That means K1 distributions, partnership paperwork, an asset that's generational.
And
it's
willable?
theirs. It's willable. You could put it right into your kids' names if you wanted to from day one. It's yours. It's an asset. And once it's given to you, the only way that you lose it is you sell it, right? And so, and if you want to retire with our company, then you're going to keep getting those K1 checks for generationally, okay? That's our way of saying we're going to empower you with more information, and we're going to trust you with more control than you've ever had. Be my partner, right? Take ownership of that opportunity, but beyond that, I'm going to make you an owner while you do it.
And we're not talking a small amount. Like, you're talking about 20%.
20% of the company, is promised to the team.
20% of the company is what you're giving away, like of actual partnership. I mean, I've heard of shares of stock or phantom shares. You hear that term a lot, or vesting maybe in 3 or 4 years when they clearly know you're already going to leave the company based on the average turn rate. But you're talking actual partnership, true K1.
Yep. And if you look at the entire model, right, there's the ownership aspect and then the profit sharing component. So 50% of our profit is allocated to the profit sharing model, 20% to ownership, and then 30% for operating reserves and founding partners. So simple math, 70% of company profit is promised to the team.
To the field.
To the field.
And that's even ops people, right?
Ops as well, yes.
That's incredible.
So 70% of profit is promised to the team. The only way you can even make a commitment like that is if you're in an open source company where truth reigns.
Yeah, like how could you display profit share if you don't display revenue?
You can't.
So no other company can offer a profit sharing with truth, because they could say, oh, we made $1,000 this month. Here's your little check.
Right.
But in behind the scenes, they don't have to, because they're not operating truth. They're not opening up the books.
That's right.
But you guys actually have open API.
That's right. And why are we giving away 70%?
Yeah, that's ridiculous. It's crazy.
It's our phrase is, it is a strategic investment in an abundance mindset to deliver truth to the industry, to put fire on the fuel of truth. That's what we want to do. Our goal, our mission as a company is to disrupt everything. When we're done 3 years from now, there's going to be a question that every loan officer, that every sales leader asks when they get that recruiting call. And it's going to sound something like this. If I was to consider joining your company, will I know what the full revenue of every loan that I originate with your company is? Will I know what the profit on that company is, for that loan is? Will I know what my leadership team is making on that loan? And will I be empowered to hold you accountable to it? We empower loan officers to hold us accountable to the truth in 2 very real ways. Okay. 1, a raw direct to secondary pricing login. You'll have your own business logins where you price at par.
Where you set up your margins.
But you'll also have no corporate adjusters, no branch adjusters, no nothing adjusters other than what the investor overlays are and the investor loan level adjustments. You'll know exactly what the investor is paying for that loan in a true raw login. The second way is we empower you when a loan sells to reach out to accounting and say, will you show me the sales coupon for that loan? Will you show me what the value of that loan was to the company? And so if we're telling you it was worth $8,000, you can see that it was worth $8,000 on that from the actual check from the investor.
What do you think would happen if the average LO in the industry right now asked their accounting staff for the sales coupon of that loan that they just sold? What would they actually get in response? Would they say no, or like would they even know how to respond? Like, I've never even thought about it. So challenge out to all you guys out there. Please do that.
Yeah, that's interesting.
I would love to hear your feedback. Like, send it to me. Like, I want to know their response.
They would probably scramble a little bit. And they'd have to talk to a lot of managers.
Because they wouldn't know.
They'd have to be like...
Because the accountants don't even see it really fully.
Because they'd have to get permission from the branch manager, then they have to get permission from the regional, because all these people have their fingers.
The regionals don't even know what's
They don't know what the truth is, but they're going to... This is what I think they would do. They would dig in to see how honest they need to be.
How honest they need to be?
Yeah. I think that's what they would do.
Do you think they would send them something?
I think that they'd either completely deflect it, right?
Like,
we don't have access to that Or they would come up with like, how angry is this person? How important are they?
They'll give you a bump in comp just for asking that simple question.
That there's some truth, some real truth to that.
How about we give you a 5 basis point raise and we don't bring this up again.
I've done transparent. We call them clear views. Okay, and we invite originators and leaders in to see the value of their business for the first time in their career.
They full price it, take a
full price. We go into secondary. We show them the absolute truth. They see what they're making their company for the first time. So we were talking to 2 branches, one on the West Coast and one on the East Coast, with the exact same mortgage company. One branch was operating at a blended margin of 570 basis points. So every time that they closed a loan, on average, they were making 5.7% of the loan amount in revenue to the company.
Okay.
The next branch in a different market, they were operating at 330. The amount that was going to their P&L was identical.
Wow.
Okay. So one branch was being stepped on by over 200 basis points more than the next branch. The only difference was the noise the leader made.
Really?
Yes. One leader was watching like a hawk, and they would scream every single time they saw it.
So it was a little bit better, but still bad.
The other, he was doing what he could to hold them accountable.
Yeah.
And he was a $120 million producer himself.
So they didn't really have much room.
They mattered, right? Yeah. Like a big deal. Yeah. And so it was like, and he would hear the same thing. Oh, I'm sorry. Like that wasn't supposed to happen. It was a mistake. Like excuse.
We'll fix that.
Yeah, we'll fix that. We'll fix that.
60 days later.
And then 60 days later, 90 days later, he's doing it again. Oh, that wasn't supposed to happen. We'll fix that.
Our bad.
Whereas the next manager has got his head down, doing his job, running a massive $250 million branch, getting crushed.
It could have been so much easier on him.
Getting crushed.
That's crazy. So, hey, I appreciate everybody tuning in and listening to us. Thank you, Bill, for being a part and just sharing the vision and bringing clarity. Like, we need more people in our space and in our world to do things just because we can.
Well, we need more people like you. So
I appreciate it.
We need more partners. We need more partners like you, and it's exciting to have someone like you that's a visionary themselves and able to see, create, and be the leader and entrepreneur that you are. And so if you're, it's going to be, it's every time someone of your caliber and your talent partners with us, it's exciting. And it's going to be awesome to see what you do with this.
I appreciate that. Yeah, just looking at it, guys, those of you guys that are out there, this mortgage company, it's going to innovate our entire mortgage space. I truly believe it. After seeing the model, and then seeing what the profit share holds and what they're going to give back to the field.
It is not vanilla. It is not vanilla wrapped in a different brand. We're selling Rocky Road, guys.
Yeah, this thing is full of marshmallows. Mm-hmm. And I typically don't like marshmallows, but today they taste great. And so, guys, like I encourage you, reach out to myself or Bill or whoever. You can reach out, questions at kpeliteaz.com. If you're an LO, listen to this call. Do a pricing, just a clear view call with Bill. Like I'd highly encourage it. Like you owe it to yourself to know what
at
you're
least
actually
know.
worth.
At least know.
You should know what you're worth. Like that, we're not even saying you come join. I mean, you probably will once you see it, but that's besides the point. Know what you're worth. What do you actually bring to the company, and how much are you making? What percentage of that? I tell you what, as a real estate agent, if I knew I was a huge part of the company and I make less than 25% of the revenue, I'd feel a little worried about it. In real estate, you can see that clearly never happens. Real estate agents, on average, for commission percentages, make over 85% of the revenue. They make the revenue 85%. And in mortgage, it's probably less than 40%. Probably more like 25%.
It's more like 20, 25%.
Don't be a 25% revenue distributor. Go check this out. Like I, again, highly encourage, reach out. Love to hear back from you. And Bill, again, thanks.
Yeah, it was a pleasure.
And we will see all you guys in a couple weeks. Appreciate it.
Thank you.